in case of next time. So let me look for my. In case of next time, I have to ever get involved with this move is this. Okay, you have a sell side liquidity sitting right here. Okay, you have a sell side liquidity sitting right here. You just have to wait for 2 a.m. Eastern time, which is 8 a.m. Nigerian time. Allow any of these sell side to be swept because you had multiple sell side liquidity. Any isolated week you see at the downside is sell side liquidity. So you see this price credit and price credit is relatively equal right here. And where did you get your entry from? Where did you get your entry from? You get your entry after pullback. You get, so price broke this high and then created a fair value gap on the 3 minutes. Remember, it's the 3 minute time frame I'm in right now. Price created a fair value gap. Are you seeing it? And price retraced back into it, and that was a boom. Why are you going to keep your stop loss just below this? What's up, traders? All right, so I decided to make this this video about GBPUSD. So I'll be analyzing both GBPUSD. Maybe in another video I'm going to analyze NASDAQ again. All right, so looking at what GBPUSD is up to on the new week. Firstly, I'm going to go on the monthly time frame and look at the structure. All right, so you can see that on GBPUSD on the monthly time frame, we are bearish. Price is making lower highs and lower lows. You get lower highs and lower lows. Look at it. Okay. Price is making lower highs, lower lows. You see it. So we are just very bearish. And now we are in this level. And price has pulled back to this level. So looking at this, if I draw my fib from here to the body, yeah, you will find out that price has not gotten to 50% of the fib, okay, which means price has to go higher to get into this red, to get to the red line. The red line is 50% of our fib, you feel me? So that's always the equilibrium between the range, all right, between the range of a particular swing. The equilibrium is always 50%. Anything above it will warrant for sales to continue the downtrend. Anything below it will warrant for buys to get into the premium level. The premium level is always above the 50%, and the discount level is above the 50%. All right. So look at it. This is where we are. This is the week. All right. This is the this is December. Okay. December candle. So we need to see some kind of rally to the upside. Now, why that rally? Because we have a fair value gap here also. Let me change the color of this. That can look more appealing. Okay, so we have a fair value gap here. We have a fair value gap here. So price is more likely to pull up to that level, feel me, before crashing down. So the market is fractal. Whatever you see happens on the monthly, daily, all of them can see happen on any time frame. It doesn't matter. So looking at this month should be bullish. Even January should be bullish. Okay. So let's see the weekly time frame. What GBPUSD is doing. Removing this fib. So on the weekly, we have price internal structure still moving down, lower highs, lower lows, lower highs, lower lows. As you can see, this imbalance or fair value gap was disrespected. Price just drove through it, and the other block that followed suit, price failed the other block that followed suit, which is a sign of what? More bulls. Okay, which is a sign of more bulls. Now, if you zoom in, you're going to see how the last week candle closed. Just look at it, how it closed, like almost like a hammer. You get almost like a hammer how it closed. What does this indicate? We just cleared a buy side liquidity right here. You see that? We just cleared a buy side liquidity here on the weekly time frame. We just push out and you see price. So there are two things we might see this week. First, we might see a little, this candle might close bearish because we just cleared buy side liquidity. Okay, that's the probability. And another reason why we might see a bullish move is because of a fair value gap here, meaning price will like to mitigate it, because after failing this fair value gap, after this fair value gap has failed, this other block has also failed. Where do you think price is going to go next? This fair value gap. So we might have this week being bullish, close bullish. Yeah, anything is possible. We might have it close bearish. But to me, what is more likely to happen is a bullish closing of the week. So let's see where the daily time frame is telling us. Why I prefer, because after all this is failing, you hardly just see it start falling from here. You hardly. The market most times would like to fall from a particular fair value gap or so. All right, let's see what the daily time frame is saying. Okay, so the daily time frame is saying something to know the next direction. So now look at the daily time frame. We are bullish, right? Price is making higher highs and higher lows. Are you seeing it? We are bullish in the daily time frame. Make use of my part too. The price is making higher highs, higher lows, higher highs, higher lows. We are going up higher. So since we are making higher highs and higher lows, see where price actually mitigated the last time we pulled back was this fair value gap. Price mitigated it and price bounced off it. And obviously, the next place you see price is likely to go is heading for this buy side liquidity here. As you can see, this week, isolated weeks, they are all buy side liquidities, this and this. So price is likely to head for it. Okay, so today I'll be bullish on GBPUSD because price is likely to head for this, that come down. Because if it wants to come down, where is it likely heading for? This mitigation that happened was already around this fair value gap, except you think price wants to come down to mitigate the other block the next, but I doubt. The probability of that happening is very low. Alright, so price is likely to go higher to clear this buy side liquidity, thereby mitigating this weekly fair value gap I marked out, which is still making us bullish on the week. On the monthly, we see bulls, weekly we see bulls, daily we see more bulls, right? So likely today we are likely to see bullish effect in the market. All right, so if I check the hourly time frame for now, we can't tell where the market is going or what price is likely to do, because it's not up to 7 o'clock Eastern time. 7 o'clock Eastern time is where we normally look for the trend of the market on the 1 hour, where we are headed to and all that. But if I'm to judge from what I'm seeing, right, on the hourly time frame, we're going to find out that we are actually bullish. We're making higher highs and higher lows, higher highs and higher lows. This week that happened was on Friday with some stupid volatility we saw on GBPUSD. You get? So this week that happened just scattered the whole structure of the market, right? So if I was going to draw this my feed to know where we are to do any stuff from, I'm supposed to draw it this way. Okay, but if you draw it this way, you're going to find out that price has already retraced with this week down to these levels. Okay, so drawing this feed this way is not going to be reasonable. Okay, that's why we normally wait for 7 Eastern time to see where price has come. If I was trying to catch anything this London session, I'm going to draw my feed this way down. Okay, a fib short. Why? Because price, you cannot draw it as a fib long again, because price has, if you want to draw it from here to here, price has already retraced and moved up. If you want to draw it from here to here, it's going to look stupid because price has already changed character from here. So let me show you guys what I mean. Price already changed character from here. Okay, so it's not going to be useful. So drawing my feed from top to down, from Friday's high to current low is just the best option. And where are we right now? We are actually still going to be bullish because we have never retraced into the premium. Had it been we have had something like this already, then we'll look for sales. But then we need to get to this point. So basically, if you're looking for any setup this London session, that should be buys, because we need price to pull up here. Maybe if price does it in the London session, then we might look for New York reversal. But if price does not do that, or price just keep ranging, or just keep trying to go down more this London session, New York session will still look for buys, which will align with what we are looking for on the weekly, on the monthly, on the daily. All right. So that's my thoughts for GBP USD. That's for GBP USD. All right. So look at GBP USD. GBP USD is London session. GBP USD is pulling. GBP USD is pulling up. Why is this so? So let me show you guys why it's so. Look at it. Like I explained, I said you have to draw your fee from this high to this current low, previous high to previous day low. Now around here, when I was making the illustration, I said we are going to see some buys to this red line. I said it right. And how are you going to get involved in this buys if you trade London session using time and price? All right, so let's see 15. Let's see what 15 minutes is going to show us. All right, so how to ever get involved in this move in case of next time, guys. In case of next time. So let me look for my. In case of next time, how to ever get involved in this move is this. Okay. You have a sell side liquidity sitting right here. Okay. You have a sell side liquidity sitting right here. You just have to wait for 2 a.m. Eastern time, which is 8 a.m. Nigerian time. Allow any of these sell side to be swept because you had multiple sell side liquidity. Any isolated week you see at the downside is sell side liquidity. So you see this price credit and price credit relatively low right here. And where did you get your entry from? Where did you get your entry from? You get your entry after pullback. You get, so price broke this high and then created a fair value gap on the 3 minutes. Remember, it's the 3 minute time frame I'm in right now. Price created a fair value gap. Are you seeing it? And price retraced back into it, and that was a boom. Why are you going to keep your stop loss just below this? Okay, where is your TP going to stay? I'll go to the 15 minutes to determine where my TP will stay. And if I was in this move, that would have been a serious cash out. See that? So why would I be aiming this? Because that's the liquidity. That's the liquidity pool right there. So that would be like 2.72 risk to reward. You can have your take profits here to get maximum result of what you want to achieve this London session. So those of you trading London session, this is the move you would have gotten in. You get. So, but I don't trade London session though. I'm waiting for New York, and in New York, price should be around here and all that, and then we're going to look for shorts. So let's see how it goes, guys. Peace out. Alright, so welcome back. This is NASDAQ. Okay, so NASDAQ behaves more like, GBP USD more, and also like Euro USD, and same as US 30 SPX 500, NASDAQ, Euro USD, GBP USD are things I know they behave alike. Most times their structures might not look exactly the same. I mean, between the indices and currency, but most times the bias we have each day for NASDAQ is the same bias we have each day for GBP USD. If it clashes, then there's something wrong, right? It hardly clashes. Okay, so looking at this, I'm going to the monthly time frame to look at what NASDAQ is doing. All right, so if you look at what NASDAQ is doing, NASDAQ pulled up, and started pulling back again for some, I think, for like since 2021 to now, NASDAQ has been falling. I've had a bearish index market. I remember back then they say just buy indices, put your money in indices, and it's forever bullish. I know back in 2010, it was truly bullish. Indices are always going up. Not until December, around December 2021, you see price just down. I don't know where it's retracing to, but what I'm seeing on the NASDAQ is currently a lower high and lower low. Also, see price going down, retracing, has made a lower low right now. And as you can see, price is around around a fair value gap here, sitting here. You just retrace into a fair value gap sitting here, and you can see this December we have a bearish candle that just showed that it's reacting very well to the fair value gap on the monthly. So now this is showing two liquidity pools, right? We have this buy side sitting here, we have also this sell side sitting here too. You get me? So with this reaction, where do we see price take out this to create a lower low? But let's see what the weekly is saying. So I'm bearish on the monthly time frame because of what price is doing. So now on the weekly time frame, what do we see? What's price reacting to? Where is price reacting to? So on this weekly time frame, there's an order block right here, and as you can see, sorry, let me draw it properly. And as you can see, price tapped into that order block, and there's a very beautiful reaction, which was last week candle that was formed very bearish. Okay, so this bearish candle has shown that price is likely to close bearish this week again. Why? Heading for this liquidity pool, this here and this. But then the markets can do anything. If GU is showing everything bullish, then I don't know what NASDAQ is trying to do, but let's just see. They don't correlate all the time. So on weekly, I still see bearish signs. So now daily is going to show us what's going to happen shortly before those bearish indications. So we have a fair value gap here that's been open, and you see price has mitigated it severally and is making lower lows inside. That shows you that the fair value gap is becoming irrelevant already, because price is going up, bouncing inside, making lower lows inside. When I see stuff like this, I don't really take the fair value gap very seriously. It means price is likely to fail it or maybe come down to this other block, most likely. But looking at it from another perspective on the daily chart, we find out that SSL was just taking, sell-side liquidity was just taking here. Okay, meaning the next expansion is around this relatively equal highs we find here. This week and this week are almost equal, so I still call it relatively equal high. Though this week was able to take out this equal highs here, right? But then it still shows that there's some kind of liquidity still sitting here with a very big fair value gap we find around here. Okay, good. So after price has cleared this and closed bullish, we see some candle reaction again, because there's a fair value gap staying here also. So on the NASDAQ daily time frame, if I said I'm bearish monthly, bearish weekly, on the daily, what I'm to see today is just very dicey. Now I don't know if it's going to be a sell or going to be a buy. Why? It's because if you're looking at it from a sell perspective, price taps into the fair value gap, and you see this bearish candle that closed on Friday. You get what we are likely to see maybe is further drop. I don't know if you're getting me. Around New York session today, what we are going to see is maybe further drop. Why do we think of further drop? Because of this fair value gap. Maybe price wants to do a lower low, since it's been making lower lows inside this area. But another thing you can think of is price also can just keep going up to chase this buy side liquidity we have staying here. So today might be bullish to clear it. Anything is possible. But again, bears look more reasonable on the NASDAQ daily. Again, bears look more reasonable to think of today. So on GU we are bullish, right? But on NASDAQ I'm seeing bears. Now it's possible to have different ideas on NASDAQ and GU. It's possible, there's nothing wrong. But most times, if this guy is going to sell, GU on the other hand is going to give us bearish confirmations on the 1 hour time frame, because after all, the 1 hour time frame makes up the daily chart. What I'm saying is, if you look at GBPUSD on the 1 hour time frame, okay, that's why I said it before, that this London price might just pull up to this, to 50% of the fib or above, optimum trade entry OTE. All right. So if you want to learn all these terminologies, optimum trade entry, premium discount, all of that stuff, all right, I'm going to post my username under this video. When I post it, what do? Just send a message to me and get your role into the mentorship. All right. But the way it stands now, London might pull up here, and New York, once we come New York and we see price around here, I'm gonna look for sales, because there's nothing to buy here. Price has to drop. Okay, price has to drop, and that will make it complete a very nice chart pattern that hardly fails. And what was that chart pattern coming? Head and shoulders. If it happens on the New York session, if I see price around that area New York session, I will confirm it for a head and shoulder, and that's going to be very bearish. So then that might align with what NASDAQ is going to do today. So let's just see. That's why I said it correlates. But guess what? Sometimes they show different signs. But if you're smart enough, you know that most times you are selling on NASDAQ, you have to be selling on GU and EU, right? So that's why I see on NASDAQ. Okay, that's why I see on NASDAQ. We see price is likely to drop further. So I'm bearish on monthly, weekly, daily. Let's see what 1 hour is saying. Okay, so what's 1 hour saying on NASDAQ? All right, so on NASDAQ, if I was to draw my fib, I'm going to draw my fib to be, because right now we don't know what trend is dominant. Okay, we see that price has pulled up this level, but the pullback are so big that looking to draw your fib as a fib long is very pointless. Very pointless. So personally, if I want to draw my fib, I'm going to draw a fib short from this high towards this low. Why am I doing that? I'm doing that because price has pulled back here before and went up, meaning if you drew your fib from this low or from this low, price has pulled back enough to your fib. I mean to your 50%, and has gone up. So price coming back to this level cannot still look for buys. Everything has changed to be bearish. As you can see, even a head and shoulder is showing here. Head, shoulder 1, and shoulder 2. Head, shoulder 1, shoulder 2. So price is dropping. So the same thing, we might see this London session. Now, as you can see, it's now correlating back with GU. You can see the London session buys to this level, and then New York will dump, the sell. Are you seeing? So that's how they correlate. Even without, you won't just know how come that these things are that way, but you just see it. And also, around 50%, you have a very large fair value gap. So price is likely to swing inside and drop. Okay, so let's see what price will do during New York Q zone. 7 a.m. Eastern time, Nigerian time. That's okay. Sorry, NASDAQ is 8:30 Eastern time. That's the Q zone, New York Q zone, and that's around 2:30. Around 2:30 p.m. West African time, Nigerian time. Okay, 2:30 p.m. So that's when you should come to the markets and see what price is going to do for New York session. But I don't like trading. London is very, very deceptive and choppy. You get me? So that's why I think. And when price pulls up here for the New York, it's going to be lots more, a very clean trade, because we'll have all the volatility pointing towards all this liquidity we have here, to clear them. Okay, and also to see a lower high, a lower low was created, another lower high was created. So on the big picture, to look at 4 hours, you're going to see well. On the big picture, this is it. Look at it, you need to see another lower low. Okay, so this is it. See, this breaks down, so we need to see this leg too to complete the algorithm. So that's all for NASDAQ. Let's look at US30. If it's going to be the same, it should look the same. Let me pause this. So let's look at US30. How many of you guys trade US30? Or rather, I do Euro USD, because most people on the channel trade currencies than indices. Okay, All right, so looking at the monthly time frame on Euro USD, it should behave like GU. It should behave like GU. So on the monthly time frame, we are bearish. Okay, price is just taking out this close. It went down, and that's the trend involved. But if I'm to draw my fib from this high to this low, I'm going to find out that 50% is right here, and price needs to pull back all the way to this premium level before we see a drop. So I'm likely to be bullish on Euro USD. So Euro USD is showing more bulls than bears. Okay, for this month, that's what I mean. This month, and again, don't forget, I just saw something like an order block here. Look at this. Remember, we are into a weekly order block. I don't know if GU is showing the same. Let me check. All right, there's no order block on GU. GU does not have any other block around. Okay, so I can see the other block just in Euro USD. Feel me? So this other block here can influence some certain rejection that might make this month a little bearish, but price is also very likely to just slide through this month. So I'm bullish, and this bullishness might still affect January. So let's look at the weekly time frame. All right, on the weekly time frame, price is likely bullish because price actually broke this structure, this high, created a big fair value gap, and you see our price enter the fair value gap here and is racing upwards. It's so much precision. So we have buy side liquidity resting here. We have another buy side liquidity resting up here. So what do you think price is likely to do this week? Close bearish or bullish? The bullish candles that entered into this other block here, this other block. See how bullish it is. Closed very bullish, very bullish. Inside an order block, sign of the other block is going to fail. Very big sign. Look how it's closed, and it has already passed 50% of the order block. What I mean 50% of the order block, if you zoom in where I do this order block, zoom in very well, you're going to find out that if you draw your fib inside the order block, a fib short because it's a bearish order block. Okay, if you draw a fib short inside, look at 50% of this level, which I'm going to mark here now with a horizontal line. So you can see, I'm going to use the red. See that red place right there? That's 50%. That's it. If price pulls into an order block and it passes 50% of it, the other block is going to fail, making it more bullish for us. All right, making it more bullish for us. So we've seen that price has filled this other block is going to fail because of this bullish candle that went inside. That's what you see. Then this is a doji, all right, almost a doji or so, right? So see what price just did. Price formed this doji. The next thing we are likely to see is an expansion. Why? Because of the liquidity here, okay, and this here, and the fact that the other block is going to fail. So that's why I see on the weekly time frame also bulls, right? So on the daily time frame, what I'm also seeing on the daily time frame is same bulls, right? Same bulls. Price is going making higher highs, higher lows. Price pulled back. Okay, so it did not pull back so as it didn't pull back enough. If you have to drop your fee from this low to this high, find out that it did not pull back enough. Okay, it did not pull back to this red line or below the red line, which is the Fibonacci 50%. It did not. So yeah, like, okay, price might likely go up or go down. I don't know. On the daily time frame, it's more dicey than I was expecting, but it is what it is. So you just have to be careful and know what you're looking for. So as you can see, this relatively equal highs. This is a trap that price is likely to close bullish today. Like, price is likely to go for it with all the liquidity above and all that stuff. But again, let's look at this from this perspective. Okay, this is an order block, and if I'm going to draw my order block this way, price has not mitigated it yet. Okay, so what we might see today is price might go down a little to mitigate this order block and fly up. possible, but it's very close. If I just go up, tap it, give some rejection, and I don't know. That's on daily time. But on the day time frame, I'm not certain. I'm indecisive because price is not all that doing anything clear, like unlike GU yet. So on the daily time frame, I'm very, very, very uncertain. I don't know how the daily chart is going to close, but let's see what 1 hour is saying. 1 hour always makes it look way better, right? Way better. Like I say, the 1 hour makes up the daily chart. If you're confused about what the daily chart is showing or what buyers you have for a day, the 1 hour, where the 1 hour shows you to go, follow it, because it's the 1 hour time frame and other smaller time frame that builds up the daily time frame. Okay, so some days on the daily time frame I say, this is supposed to be very short, but it's not like that close bullish. It's because of what the 1 hour should be. All right, so what we are seeing on the 1 hour here is, this price is took out this high. Look at it, breakout structure. Look at it. This high was taken peacefully, right, and price pull back. Now the pullback has happened before, so if I was to draw my fib, I would draw my fib like this, from this low to this high. But the price has pulled back before this week, which was on Friday, so we are likely not to see any reasonable bullish move anymore because that's happened. So this thing that came down here is a loss of bullish momentum, so price is bearish. You're right. So the best thing, or the best way to draw a fib, from here, this high, to this low. Why am I choosing that high? Why am I not choosing this high? It's because if I choose this high, price has already retraced. You get how fib works. If I choose this high, price has already retraced. We are always looking for a new swing. That's how fibs are drawn on the recent swing. So the recent swing is this, from this high to this low. Okay, so currently, like GU, like NASDAQ, like EURUSD, same thing on the 1 hour time frame. That this London, I want to see price. That's why you see it almost does the same thing. I want to see price pull back here, then New York we see some kind of crash. Okay, so that's the same thing I still have for this thing, EURUSD. But what's going to happen this London or EURUSD can seem, is bullish, because on the London now, because we have not entered this red line, we have not gone above the red line. What I can see here is very bullish. Why? Because we are expecting price to, on the 15th, you're going to expect price to do some liquidity grab. All right, it's already 8 a.m. Nigerian time, which is 2 a.m. Eastern time here. So London Q zone is active. So before you ever buy EURUSD, if you want to trade London session, you want to see something like this. It's 3 minutes breaker structure, and then you buy the shit up. Once you're at this red line, you want to make sure you're closed. Once you're around this red line, or even if you're taking off this high, you want to make sure you're out of the trade. Whatever you try to buy there or sell price break, all these things are just manipulation to get people involved. If you try to buy here or anything, you'll get fucked. Allow price to clear this low. If price doesn't clear this low, then let it be. Don't try to buy it within this London session. Let it be. So personally, I like coming to the New York session. I've stopped London session for a couple of reasons. I just said here that London is very deceptive and does not move very well if you're working with this algorithm. All right. So we have to pull back to this level during the New York and then sell. You feel me? So that's enough for the XXX USD as I've said, and NASDAQ. All right. So eyes on charts. Coming back 1 p.m. Eastern time. So let's see how it goes. Sorry, 1 p.m. Nigerian time. Let's see how it goes.